Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to do a weekend read review with the cannabis merger and acquisition wrap up. We'll talk about how big banking is more interested in lending to the cannabis industry, but yet some cannabis companies are scaling back. On the line with us is Dan Chemist, our CBD correspondent with Good CBD Products.
I wouldn't scale back, Chronic. I'd go all in, brother.
Go big or go home. So with this report from the MJ Business Daily, they talk about the breakneck pace of cannabis mergers and acquisitions scaling back. They say that there was only 16 deals this year compared with 29 last year, but the amount of deals in the first 9 months were more versus last year. Cultivation remains the prime mover behind M&A activity in September, as well as this year. I think just the amount of money put into cultivation has been pushed above real estate investment plays like MSOs and cannabis cafes, and I think it's even more than technology as well. So big push for cultivation right now.
Yeah, kind of real estate stuff, kind of, really, right?
Some of those cultivation, they like with an organ that we saw at TJ's Organics, $12.5 million purchase, that did come with retail stores. So although I believe TJ's Organics or TJ's Gardens, and in this case, the store TJ's Provisions, they've got a phenomenal setup. So James Apreza is one of the co-founders there, and a phenomenal flower and worth every penny of it. So we talked about the number of raises in September was up over the same month, 53 capital raises versus 43 in the same amount. So it's actually down. In September, the average raise was 14.7 million for an overall total of 630 million. And this year's September average was only 11 with an overall figure of 600 million. So there's a different profile from each month on this graph here. We're seeing that there's nearly triple the previous year, resulting in an overall total of 972 million raised versus 369 million raised in August.
We're going to have to start tracking the stuff that unwinds too, right? Like the MedBen thing and all that stuff. Because again, it's funny, for all the deals that come together, some are coming apart.
Yeah, CFO of MedMen was let go in that big merger that they had unwinded. We saw that Canopy Growth let their CEO, they let him go a few months ago because the deals he was putting together weren't generating revenue. And so we're kind of seeing a shift into more cultivation. So as noted, that continues to be the driving force behind M&As over the last few months, even though overall volume has slowed down. So exactly half of the closed deals in September involved buyers in that sector. So broadly in line with the trend for the first 9 months of 2019, when 131 buyers in cultivation and retail were responsible for a total of 278 closed deals. The infused products and extract segment accounted for 5 of the 16 completed M&A deals in September. I think a lot of that has to do with branding, as that's starting to take off. You're seeing with vape market that it's going to be really essential. It's going to be crucial to build honest, transparent companies that you can rely on and depend on and have like a brand that's really trusted.
Oh, the damage that comes from some of the different, crises, right? And what it means to be, if you're one of those brands front and center of that, where your name is in a bunch of articles that are negative, it's a tricky time right now. Very tricky.
It's going to get a little interesting. So the Safe Banking Act passed the House. It's now going to the Senate. That's going to offer people in the cannabis industry available to bank legally. And with that comes, more challenges. How are you going to scale, automate, expand, go from state to state to international? And so this article goes on to say, quote, banks and other financial institutions are gearing up for a potential massive involvement in the marijuana industry after last month's passage of the Safe Banking Act by the U.S. House of Representatives. While it remains unclear how the measure might fare in the Senate if President Trump were to sign it into law, the bill's eventual passage would allow banks to add state legal cannabis firms from all over the country as customers without fear of federal reprisal.
Yeah, too funny. Again, you're from the real world. You have access to banks, right? Very interesting, running a business without being able to bank your cash.
Yeah, I've seen a lot of people come in for small business administrative loans, SBA loans, or other lending options in the banking industry, and just not have that approved, right? And so it's tough enough as an entrepreneur to come in with a business idea, concept, business plan, and then not get funded. It's another thing entirely to have a business model that makes sense, that's generating revenue, and you still don't have that opportunity to bank and have those opportunities other people do. So it's going to lead into more opportunities, but with those opportunities come responsibility. So you're going to need people to be directors of finance. You'll need somebody in compliance. You'll need to add more people as you have these responsibilities, because this really is going to be an added liability potentially to your balance sheet.
Yeah, I like it actually. It's funny because again, ultimately from a business perspective, the businesses that are leading edge out there and making their way, it'll be very interesting to watch them transition, if you will, back to more normal business. Because today, if you're a successful operator in the weed world, again, some of the things you had to learn to do in order to be a successful operator, it'll be very interesting to watch them kind of try and retrain and break those habits, right?
And even with some of these options, some cannabis companies are deciding to scale back as access to cannabis capital tightens up. For example, Green Organic Dutchman announces having difficulty funding its expansion plans via commercial banks and equipment leasing. And the Canadian company said, quote, may revise the construction schedule if it's unable to obtain sufficient financing on reasonable terms within the required time frame, end quote. So this follows the termination of MedMen, like you mentioned, Dan. They tried to acquire PharmaCann, which is an LA-based company. So they said that there was an inability to get funding for those expansion plans. This is also on the back of WeWork crumbling from a $47 billion valuation to possibly zero, because within the next 2 months, if they don't get funding, they're not going to be able to make payments on all of their commercial properties. They will be insolvent, literally worthless. You also saw Ianthus Capital Holdings announce it raised $20 million with a commitment for another $80 million to fully fund its growth plans. And so you're kind of seeing that's not guaranteed. So there's caveats within these contracts. And if things don't work out, then they're going to unwind. So you're kind of seeing some PR, if you will, without a lot of substantial reality behind it, as these deals just start to crumble, as this balloon is deflating a little bit back to reality valuations.
The nature of a market that's swinging like a pendulum.
Right. And a lot of these companies just aren't being realistic with that. So you're seeing business plans that assume that they get additional capital raises. I mean, that's kind of crazy. If you can't continue to operate, continue to generate revenue, if you're only relying on additional capital raises, that's an issue. Just like we're seeing with the top 4 Canadian publicly traded companies, they're expecting to sell a wholesale price of $1.74. Now, that's not going to happen. It's harvest season. We're going to see 7 or 8 cents a gram wholesale, and that $1.74 price point is not going to stick around for long, and that capital is going to dry up. And so there's going to be opportunities down the road as those companies are going to liquidate, go bankrupt, or ditch their shareholders or bondholders for pennies on the dollar.
So you don't think that Canadian cannabis is going to get to 8 cents a gram, do you?
No, I think they'll file for bankruptcy protection before that, but I think the 7 and 8 cents a gram will catch up to Canada and cause all of that to happen. Yes, it's just a matter of time.
So you think that eventually what's going to happen is these companies that raise cash on this projection of, hey, we're going to be able to sell weed for $1.74 a gram, right? And then when reality sets in and it's, whether or not it's 8 cents or 80 cents, the fact of the matter is your spreadsheet doesn't work as good when it's less. So you think that's going to catch up. What do you think is the trajectory on that?
I think it's going to happen really soon. Within 24 months, probably you'll start to see that catch up to one degree or another. Constellation Brands is already having to write off a lot of money. They had a $4.5 billion investment into Canada to make beverages. That's already had a $50 million write off. I don't know how much this new recent write off is, but it's a huge loss already. So, with these companies coming in thinking with grandiose ideas and super high inflated valuations, the reality will kick in. And as a commodity, that price will come down. Over time, they may make their money back with branding or some kind of monopoly or exclusivity on some kind of product. But ultimately, those prices will come back down to reality, and they're going to be caught up in the middle of it. They do have first mover advantages to take over other, SKUs, segments, opportunities. But in terms of the commodity price being $1.74 long term, absolutely not. They're going to have to file bankruptcy protection. Just wait for it.
Interesting. So in that instance, who made money in this, I guess we'll say, valuation screw up? Who makes the bread in that?
Just like any company that goes public, the early founders or the early investors are the first ones. You have your first mover advantages, right? The first ones who can liquidate. So a founder might get shares at 10 cents. So when it starts trading at 50 or 100, that multiple is a lot. It's worth getting out. And then you have your speculators too, the early investors, the mom and pops, just people on the street investing. They probably made a really good return as well. But the millionaires come from early founders or early investors.
Interesting. I learned so much listening to the Talking Hedge, your cannabis business podcast. I really do.
There's some good ways to go public. You can go IPO, on average 4.2 million. You can do an RTO or reverse takeover. It's about 800,000. Or you can just keep adding SKUs, over a dozen, until you become vertically integrated for a potential buyout opportunity. Whatever that is, just keep coming back to the Talking Hedge for some more ideas. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.